Welcome everyone. So today's topic is flipping versus rentals in a pandemic. So we're going to start off with giving you just a quick overview of what's currently happening in the economy. Okay, this is the biggest unemployment that we've had in history of the United States. Over 25% unemployment rate. Over 50 million people unemployed. That's a tremendous amount of money. And these are the states that have been affected the most, okay? The ones in red, the lighter yellow are being affected the least, okay? But overall, this has impacted every single individual. As you can see, unemployment just went down the tubes, but it's gonna recover in the fall and 2022, okay, as things get better. Over 50% of people reported losses in income. However, the rich get richer, okay? Most of the wealthiest people became richer. Now, this is expected. Over 40% of people reported depressed mood, and that's obviously due to the pandemic, because we're social creatures. Not being able to socialize, being at home, having things shut everywhere caused a big footprint on everyone's mood, okay? And this is what we need to pay attention to, okay? With the CARES Act established by Trump, we got a lot of help, businesses, individuals. However, this help is running out. As you can see, on the first quarter of 2021, the mortgage forbearance is going to end. Okay, so what it means is that when the pandemic started last March, the government said, okay, listen, if you can't pay your mortgage, don't worry, skip payments for the next 12 months. However, it's not a forgiveness of payments, it's a delay. Okay, it's just a delay of payments. So March comes, in 2 more months, they've got to be able to come up with 12 months worth of mortgage payments. And if those homeowners are still unemployed, guess what? They will immediately enter the foreclosure process. And that's pretty sad, because we already have a huge foreclosure backlog. So that's just going to add to the tsunami wave of pre-foreclosures starting to come this summer, fall, okay? So now, what are the industries that have been most affected by this? Automotive, durable consumer goods, tourism, hotels, traveling, gaming, retail, consumer services, consumer goods, manufacturing. But automotive, and as you can see, everything that has been going on is causing what's called the spiral deflationary effect. So what does this mean? Everything goes down, so the demand is going down because people are scared, they're not spending, businesses are losing money, prices are going down, layoffs and wage reductions are happening left and right. A lot of businesses have gone out completely, debt default, so people are defaulting in their mortgage, businesses, leases, bankruptcies are going through the roof, falling tax revenues. This applies to obviously the government, the states, the villages, increased real debt burden. So what's happening is, with this deflationary spiral, everyone is being impacted, and most of us have felt the pandemic one way or another. But guess what? A lot of people, especially blue collar people, have felt the impact way more, because those are the people who have been laid off. White collar people get to work remotely from home, okay? So they're the lucky ones. Now, what's been the impact on housing? Well, rentals will outperform any exit strategy that you can think of. Flips, wholesalings, and the reason why is because even when these people are not able to pay their mortgage, they will eventually get dismissed from their homes. But guess what? They're going to need a place to live. So these people are going to end up renting. Okay, so in fact, we just had a rental in Crystal Lake, and one of the prospective tenants said, I'm losing my home to foreclosure. I need a place to live. And that is just the beginning. Like that couple, there are going to be thousands and thousands. So the rental market will be extremely strong. Okay, so this is what's happening. Active listings are in decrease because there's a shortage of inventory. Okay, and why? Because since the real estate blowout in 2010, 2009, we've not been able to recover. So we still have a shortage of inventory. The demand is through the roof because guess what? Interest rates are so low. So therefore, you're finding that prices are still holding very high. Okay, it's a seller's market. Sales price, listing prices have gone up. Mortgages have also gone through the roof. Why? Because interest rates are historically low. So you can get a residential loan in the upper twos, lower threes. So it's never ever seen before. So that is why the affordability and purchasing power has gone up significantly. Therefore, the pool of buyers has increased dramatically, pushing property prices up, making this a seller's market. Next, this is what we need to stay away from right now. Everything that has to do with commercial, big retail, strip malls, commercial, office space, obviously hotels, self-storage, and Airbnb. So these are the places for now to stay away from. So this is what the data is telling us. Focus on rentals, okay? Do easy flips. They call them microflipping, which means that you do a quick and simple rehab and then put it back on the market, okay? So you're not taking big gut rehabs. Those are the ones that you need to stay away from. Why? Because we're gonna have pricing corrections in the next 6 to 9 months. What it means is that when all these foreclosures come into the market, guess what? An increase in inventory supply is going to cause property prices to decline. They're going to decline about 10 to 15%. Therefore, if you do a big job, a big rehab right now, you're going to end up spending like 4, 5, 6 months just on the rehab. Now, by the time you put the property in the market, you're going to find out that you're going to end up with declining prices. So you have to be very cautious when you come up with your ARVs today for a future flip. So just be very aware of it. That is why we recommend easy and quick flips. Okay, wholesale is going to be an amazing exit strategy because again, you're going to find thousands and thousands of distressed homeowners. They can't afford their home. They are suffering from unemployment and they're going to enter the foreclosure process. So guess what? Investors like you and I can help them, right? Because we can help them either lease their home for sale or buy their home, making sure we satisfy their creditor or the bank, the outstanding debt. So we're going to be targeting high equity homeowners. Okay, so they owe very little money, but yet their property is worth quite a lot. So huge, tremendous opportunity for wholesaling. So these are the two main lead pipes that you've got to focus. Obviously, pre-foreclosures, that's going to be by far the most important lead pipe. And as a byproduct of a high number of pre-foreclosures, the number of REOs, bank-owned properties, is going to subsequently increase. There's a direct correlation between high pre-foreclosures and high bank-owned properties because the pre-foreclosure is when the bank is taking over the property. Why? Because the owner defaulted. So if the bank is not able to sell the property at the auction, guess what? The bank is taking over the property. But the bank is not in the business of real estate. They are in the business of lending. They want to dispose of all these REOs, bank-owned properties. So that is why either you intercept the property before the bank takes over, meaning dealing directly with the owners, or buying the properties directly from the bank. Those are the two main strategies that we highly recommend to buy properties at a great discount. Okay, vacant properties, again, third best lead pipe, along with probates. Okay, so what to do now and why? So never let a good crisis go to waste. You have to stash cash, be ready for great opportunities. Right now, what we're doing is we're doing lots of refinances. We're refinancing many of our rentals into lower interest rates, and then we're doing cash out. So we're tapping into the equity to stash cash. So when we're ready to see amazing deals towards this year, end of this year, fall, winter, we're gonna be ready. However, if we see and come across awesome deals before then, we're gonna jump on them, okay? Now, the best market is right now, okay? So if you're thinking about selling, as I said before, it's a seller's market, and I happen to experience this today and yesterday. So Cheryl, she's in charge of our internal wholesaling team, put a listing yesterday. By today, she got a full price offer, $7,000 earnest money. She did a microflip, meaning a small flip. So she put it in the market in less than a day, full price offer. So people are paying crazy money. So that's what we mean by doing micro small flips. Super, super important. However, the way to build wealth in real estate is through rentals, okay? Rentals is going to by far outperform flips, wholesaling. And again, that's the main mean for you to build wealth in real estate. Why? Because not only are you going to increase your net worth over time, but you're going to increase your passive income and cash flow on a yearly basis. Why? Because population grows, the demand for rentals increases, therefore the rental market becomes super strong, rents going up, your cash flow increasing every single year. Okay, so that is just the way to go in real estate. However, do not disregard wholesaling. That's a great side strategy to take on, and also micro flipping. Now, I would like to take a look at the chat because I want to make sure that we answer all your questions. If you have any concerns, anything that you're doing right now, any questions that you may have, let's address them, and then we're gonna dive into the steps for you to focus on either rentals or flips. What is it that you need to do first? So I'm gonna put it on the board very, very fast, but before that, I wanna see if we have any questions. Okay, so please post all your questions on the chat. We're gonna address them all. If you need any resources, we'll be happy to share them with you. Question, do you have a price range you consider a micro flip versus a big flip? Absolutely, Christine. So let's dive into it. Let's start talking about flips. Okay, so what is it that you need to do if you're gonna take on a micro flip? So first of all, number one thing that you need to understand, so flip, but we're gonna put micro. That means you are buying a property for less than 200,000. Okay, that's a micro flip, and the rehab should be less than 50,000. Okay, so that's going to be a light to medium rehab. This is the key. So if you're going to take on a flip, you've got to buy the property for less than 200,000, and rehab should be less than 50,000. Anytime you start buying properties over 200,000, your rehab will for sure go through the roof. It's going to be over 50%. You're opening up many kind of worms. Okay, you're going to be dealing with a lot of inspectors, contractors. You're going to need licensed plumbers, electricians, HVAC, and so forth. Okay, so try to keep it very, very simple. You need to be in and out, because it's not the size of the flip that you do that's going to make you money. Otherwise, guess what? All GCs, general contractors, would be super wealthy, right? Because guess what? The money is not in the rehab. The money is getting amazing deals on the contract. That's when you're going to be making money, not when you rehab it, not when you flip it or sell it, not when you rent it. You're making money the minute you get a great deal on the contract. Why? Because if you want, you don't even need to buy the property. You can just wholesale it or sell the rights of the contract, and then you're making money right off the bat. Or you can get funding for it through a partner, joint venture. So again, the money is not in the rehab. Many people have the misconception that bigger rehabs, bigger money. It's the opposite. Bigger rehabs, risk goes through the roof, and then your likelihood of losing money is huge. So if you're thinking about doing flips, what you need to pay attention is microflip. Then, number one, you need to understand the market, okay? What does that mean? Guess what? There are flipping markets and rental markets. What makes a great flipping market? A great flipping market is where this is the only metric that you need to understand. The months of housing supply is less than 2.5. So what does this mean? Very simple. Every single market, what it means is that properties are selling super fast and the inventory is short. It's very short. Okay, there's a shortage of inventory in that market and the demand is super high. So that's a flipping market. So what it means is that the entire inventory in that neighborhood, in that market, is going to be gone in 2.5 months, assuming no new listings come into the market. That's a great flipping market. There are some markets that the months of housing supply is like 6, 7. So that means that it's going to take you at least 6 to 7 months to market the property before you can sell it. So you're going to be stuck with a flip for 9, 12 months. That's ridiculous, right? So you don't want to do a flip in a non-flipping market. So in ChicagoDealVault, for every single market, we give you this metric because this is the most important metric when doing flips. The months of housing supply has to be less than 2.5 months. So again, let me give you an example. Let's assume that there are in, let's say, Naperville, 100 properties for sale, and they're selling 50 properties every month. So how long would it take before you sell all 100 properties? 2 months, right? Because every month you're selling 50, assuming no new listings coming to the market. So the months of housing supply in Naperville would be 2, right? So that would be considered a great flipping market. Number 2, location. Okay, super important. Once you understand that you're in a flipping market, you've got to make sure that you pay attention to important factors that are going to affect the marketability of your property. That is near train tracks, airports, floodplains, busy streets, commercial strips, cemeteries. You want to stay away from that. You want to be in a quiet street, quiet neighborhood, okay? And most importantly, you need to understand pockets, okay? Because even in the suburbs, you're gonna have pockets. In the city of Chicago, from street to street, numbers change drastically. So in ChicagoDealVault, we show you a heat map to identify crime rates. Okay, that is super important. So we always look at that to make sure that the property is not in a high crime pocket. Okay, so I'll show you that. So location, you need to look at factors that will affect your property value and pockets, super important. Number 3, math. The numbers need to make sense, and it's super simple. You need to know and nail 3 numbers, okay, to do a successful flip. If you miss one of these 3 numbers, guess what? That's gonna tap into your net profit from the flip. So what are the numbers that you need to understand in a flip? Very simple. So we're gonna divide this into 3. One is the ARV, how much you're gonna be able to sell the property for, right? And as I told you, due to the pandemic, we're gonna have declining value. So please be very aware and cautious about ARVs. So that's pool incomes, comparable properties. Number 2, your max allowed offer. So the most you're gonna pay for the property, okay? That is super important. So most investors, guess what? Especially when there's a shortage of inventory, they end up overpaying for the property. So if you overpay for the property, guess what happens? You're going to lose money. You're not going to be able to make a profit on the flip. You need to make at least a 20% return when you flip a property. So I'm going to give you the secret or the $1 million formula, okay, that is going to allow you to do a successful flip, obviously a rental, and a successful wholesale. Pay attention to these. So buy a property. I'm going to give you an example. Let's say for 100,000, okay, and then you need to add 100,000 to this, 80 to 100,000. So let's just keep it simple. So that means that the ARV should be somewhere in the $200,000 range, and the rehab should be less than 50K. If you hit that number, it's a home run deal. That's simple. That's the formula. This secret is going to take care of the formula that most investors use. So the formula to calculate your max allowed offer, so the most you're going to pay for the property, is as follows. You multiply the ARV times 70% minus their rehab, okay? So let's assume their ARV is 200,000. Multiply that times 70%, that's 140,000. Minus the rehab. If the rehab is 40,000, the most you can pay for the property is 100,000. So this goes back to the example that I told you. So from the asking price or purchase price, add between 80 to 100,000, and the rehab should be less than 50. That's $1 million secret to identify the most you should pay for a property. And you can work always the numbers backwards. So when I see a property and they say, well, we're asking for 250, less than 200, remember, less than 200, they're asking for 150, you better appraise for 250. That's simple. Rehab should be less than 50. If that's the case, you get a great deal. The third thing that you need to make sure is that the rehab is accurate, okay? So again, ideally you said we stay within a $50,000 rehab, okay? If you go beyond 50,000, guess what? It's no longer a light medium rehab. Medium rehab. That becomes sort of like a heavy or gut rehab, okay? So stay away from big gut rehabs, please. So making sure you accurately estimate your rehab is super, super important, okay? So in ChicagoDealVault, we have a one-page estimator that is gonna help you accurately do your rehab estimate, but let me give you the rule of thumb. Super simple. Take the square footage and multiply this by 2 and add a 10,000 cushion. So a property that is less than 200,000, the square footage is going to be less than 2,000, okay? So let's assume the square footage is 1,700. Multiply 1,700 times 2, it's 34,000, okay? Plus 10,000 is going to be 44,000 to rehab the property. Again, you're still within the suggested rehab budget of 50,000. So again, take the square footage times 2 or times 20 so that you get the big $1,000 number, and then add a $10,000 cushion. 10,000 is for the unexpected. When you open up a house, there'll always be unexpected items, either plumbing, electric, HVAC, you name it. You always need to have a cushion. So again, super important. Take the square footage, multiply it by 2, and add 10,000. That's how you can easily estimate the rehab if it's not a gut rehab, and if the property is in a B, C neighborhood. Super important. So A is the most expensive, D is the most distressed neighborhood. So we like to focus primarily on B plus or perhaps A minus neighborhoods, okay? Because guess what? D and C neighborhoods were hit the most by the pandemic. This is where blue collar employees happen to live, and a lot of them got laid off. So be just very cautious about that, because you might not get collectible tenants, you might not be able to collect top dollars for your flips. So just be aware of D neighborhoods and C neighborhoods. and especially find out where the pockets are. Okay, super important. So let me just quickly summarize. If you're going to do micro flips, stay below 200,000, budget less than 50,000 for the rehab. Make sure that you're in a flipping market, meaning that the months of housing supply is less than 2.5, and we're going to give you that number in ChicagoDealVault. I'll show you that in a second. Second, location, location, location. Stay away from factors that will negatively impact your property value. Airports, train tracks, busy streets, commercial strips, cemeteries, floodplains, and that is not in a high crime pocket, okay? Every neighborhood has pockets. Be aware of that. We're going to show you in DealVault the heat map for pockets. Next, very simple math. You need to understand. You need to nail 3 numbers. ARV, so that's pulling comps. ChicagoDealVault in seconds I'll show you how to pull comps. Number 2, the most you need to pay for the property. Make sure that you never overpay for the property. And to be able to compute that, just add 80 to 100,000 to the asking price, and that should be your ARV, and the rehab, again, less than 50,000. Or you can do the formula of the ARV times 70 minus the rehab. Either way, it's going to work out if you have that big spread of 80 to 100,000. And finally, your rehab. Estimate your rehab accurately, but again, always focus on light to medium rehab. It's going to be less than 1,000. What we mean by that is you're going to be doing flooring, painting, changing light fixtures. We are going to do light electric, light plumbing, light HVAC. You're going to be updating the kitchen and the bathrooms. That's a medium rehab. You might do some fixes in the roof, change a couple of windows. I'm going to tell you what you are not doing. You're not putting a new electric system. You're not doing a new plumbing system. You're not doing brand new windows all throughout. You're not putting a new roof. You're not touching foundation issues, because every time you touch one of those systems from scratch, you're going to hit a 10,000 to 12,000 price tag. Okay, so be super cautious of taking gut rehabs. Okay, so now let's just quickly touch on the rentals. The rentals, it's easier. Why? Because you don't have the pressure to sell the property. So you can afford to pay a little bit more for the property because you're going to make up for it in the long run. Okay, so all you need to make sure, again, is that you cash flow and that you have enough equity. So the same numbers apply when you buy the rental. In fact, let me tell you, technically, buy and hold investors, typically they multiply the ARV times 80 minus the rehab. Okay, why? Because you can afford to pay more for a rental, again, because the rehab quality is not going to be the same for a rental than for a flip, right? For a flip, you need to do like the best you can, right, for that neighborhood. For a rental, it doesn't need to be totally the best. Okay, so the rehab is going to be less. What you really need to pay attention to is, even if you're going to do a rental, guess what? We still use the same formula. We still apply the flipping numbers. And you know why? Because in the past, we changed our mind. We said, we're going to keep it for a rental, but then guess what? We said, you know what? Let's just sell this property. You need to be able to have that flip or flipping exit strategy available to you. And that will only happen if you pay the right price for the property. Because if you pay more, you won't be able to sell it for a profit. In fact, you might end up losing or breaking even. So be very cautious when we buy properties. Even if the ultimate exit strategy is going to be a rental, guess what? We make sure that we can do both, that we can do a flip and that we can do a rental, even though we're not thinking about flipping the property. Flips, in my opinion, are very risky because, again, you need to make sure that you sell it for whatever amount you're thinking the ARV is going to be. You need to keep it on their budget for the rehab, and you need to pay the right price. If you miss one of those 3 numbers, you're going to have issues with your net profit. Now, let me just quickly give you the math behind why multiply this times 70. Super simple. What happens to the other 30%? 20% should be your net profit from the flip. So when you're thinking about doing a flip, you need to make at least 20% return. So if you sell the property for 200,000, what's 20% of 200,000? It's 40,000. So the net profit from the flip should be at least 20% or 40,000. What happens to the other 10%, right? The other 10% is going to be your carrying and holding expenses. That is your cost of money, interest you are paying to the lender, your utilities, gas, water, electric, while you rehab the property, taxes, insurance, HOA, if it's a condo or association, you have to pay, and that's it. Okay, so you do incur holding expenses when you rehab the property. So that is why we have to multiply the ARV times 70%. Okay, and we do the same for the rental. So I hope you can do the same for rentals too, so you have both exit strategies available to you. So if you're gonna wholesale, the same formula applies. The only difference is that you're gonna multiply ARV times 70 minus the rehab minus your wholesaling fee. Wholesaling fee is typically 5%. So if the property you're gonna wholesale is worth 100,000, you need to make about 5,000 on the wholesale. But again, it depends on the property. Every case is different. Sometimes if you get it for a great price and it's in a great neighborhood, then you can afford to increase your finder's fee or wholesaling fee. Now let's check the chat to answer some of your questions. Okay. HIP, what should be the minimum cash flow for it to be considered a good? Oh, perfect. So we target at least 250 and above. So for a rental, the cash flow should be 250 per month and above. 250 and above for a rental. Great question. Okay, so average is going to be between 300 400. Anything over 500, it's just an amazing home run deal. Okay, and let me tell you, there's a 1% rule of thumb for the rentals. I'm glad you brought that up, Heap. So if you buy a property for 100,000 and you put in 50,000 for the rehab, all in is 150,000. So guess what? You need to make at least 1% in the rental income. So if you all in investment is 150,000, what's 1% of 150,000? Is $1,500. So you need to collect at least $1,500 per month to make it a great rental. So again, if we talk about rentals, markets, there are rental markets. So what makes a great rental market? A great rental market is a market where you can buy a property for less than 200,000 and yet the rents are over 1,500 per month. Let me give an example. Allsip, Berkeley, Hillside are top rental markets where you can still buy a property for less than 200,000 and the rents are through the roof. The rents are over 1,600, 1,700. Berkeley, 3-bedroom, 2-bath will command 2,100 per month. Yet you can buy a property for less than 200,000. So it's very hard to find the property in Berkeley, but if you find one, my goodness, it'll be an amazing property for a rental. Okay, so again, your strategy, you need to understand that every market will support either flips or rentals. So you need to understand what that particular market supports, and based on that, you buy the property accordingly. So great question, Hip. Another question is, what are some key things to consider when rehabbing that will bring the value of a property closer to the comps? Great question. So you need to put your money in kitchens and baths. That's gonna double your investment when it comes to the appraisal value, okay? Because guess what? Decision makers are typically not men, are women, and they love nice kitchens, nice bathrooms. So that's where you need to put the money, okay? The new trends, when you do rehabs, it's open space, feature walls. So you've got to do accents on a wall, let's say darker gray, and the rest is a lighter gray, especially in the living room. In the bathrooms, people now, the trend is to have showers instead of bathtubs. And in fact, it's oftentimes cheaper to do a shower than the bathtub, okay? In the kitchen, again, countertop, people like quartz. Quartz is a little bit more expensive than granite, but it's totally worth it. The difference is not much. So in kitchens, they like either white kitchen cabinets or espresso, dark brown color quartz for the countertop. I mentioned the open space, and then recessed lighting in the living areas, like dining area, living space, recessed lighting. We always do ceiling fans in the bedrooms. People love ceiling fans, and they're not that expensive. When it comes to the exterior, don't forget about curb appeal. Always do some landscaping. Make sure that the property looks good from the outside, clean. The stairs, paint the mailbox or put a new one. So it's super important because that gives them, you know, as they say, you only get the one chance to make the first impression. So make sure that the curb appeal is nice on the property. Landscaping is important. Of course, during the winter, not much you can do about it. And then we prefer properties without a basement, okay? Basements are expensive when you have flooding issues. So we love slabs, crawl spaces, our favorite, because no issues with flooding, okay? And it's not gonna make a big difference when it comes to the rental amount. Great question. You always need to have great contractors. In ChicagoDealVault, we share our contractors, GCs, plumbers, electricians, HVAC, you name it. All the resources you may need, we share them with you, because if you hire a bad contractor, there goes your profit. Super, super important to get reliable contractors who are independent, who can run the show and communicate well, especially that they do quality work, good price, and in a timely manner. Super important, okay? Another question is, what email addresses do you check? Let me see and answer. I tried to support email. Yes, Sam, please send messages to support@chicagodealvault.com, okay? What are some options to get money for initial investment? Serena, okay, great question. In fact, we had a funding session on Monday. I brought in a hard money lender, private money lender, and a conventional lender. So let me quickly answer that, Serena. Funding options for you and for everyone on the line. There are like 5, 7, very quickly. I'm gonna tell you the ones I don't like, because I love to use other people's money. So you can use your own cash. I'm not so fancy about that. Number 2, pension plans, retirement plans. That's a better option. Number 3, if you have equity in your home, you can get a home equity line of credit, meaning you tap into your primary residence equity to get cash out. That's a great option, especially right now with such historically low interest rates. That's a great way to tap into money. But now let me get into the better ways to fund your deals. Hard money lenders and private money lenders. Hard money lenders are institutional money, okay? Big corporations such as Renovo, Barnett, Chicago Funding, Lima Capital, just to mention a few. Home lending, they are backed up by hedge funds, and they are asset-based. So they're gonna be looking at your deal. If you have a great deal with equity and that cash flows, they're gonna give you the money. Of course, they're gonna look into your experience, your credit is important for them, and what your exit strategy is gonna be. So they wanna make sure that you mitigate their concerns. But again, they're gonna be looking at your also liquidity, your assets, experience, your credit, because your credit is gonna determine the terms of the loan. Better credit over 720, you're gonna get the better terms. It's expensive money, so you're looking at like between 9 all the way to 15% interest rate, 2 points up front. A point is 1% of the total loan amount, and then it's a short-term loan, 4 to 9, 12 months, okay? So that's institutional money. And then private money lenders are individuals like you and me. It's relationship-based, but again, they are asset-based. They're gonna be looking at the property, the deal. So if the deal is makes sense, it's easy to get money from private money lenders. And the cool thing about both of them, hard money lenders and private money lenders, is that they will finance 100% of the rehab. The difference between hard money lenders and private money lenders is that private money lenders, they're going to give you the money so quickly you can close in as little as a week, 2 weeks. Hard money lenders, they're going to take about 2-3 weeks at least. Okay, so it takes a little bit longer. They need to do an appraisal. They need to follow a protocol. Private money lenders is way quicker, but it's about the same terms: 9 to 15% interest, 2 points, and it's a short-term loan. Okay, so that's what you need to purchase the property and rehab the property, either hard money lenders or private money lenders. That applies obviously when you buy the property, either for a flip or for a rental.
Muted, Hugo.
Now, on the back end, that applies for the flip. When you do the rental, you need to refinance, right? Because once you purchase the property and rehab the property, you obviously need to pay off the expensive money. How do you do that? You've got to refinance, okay? What it means is that now you need to roll that rehab loan into a rental loan. So it's a longer term, 30-year amortization, lower interest rate. Okay, super important to do that. And then you have the option to go the residential or the commercial route. Residential is going to be a loan under your name, but they're going to ask you a lot of documentation: W-2, tax returns, 2 years of bank statements. They're going to ask you for a lot of documentation. However, the interest rate is the lowest, and it shows on your credit. However, if you go the commercial route, the loan is going to be under your entity. It will never show on your credit, but you're going to get a higher interest rate, somewhere in the 5s. But the cool thing is that they don't ask you for W-2s. They'll ask you for tax returns, but not so much focus on your personal income. Okay, so that's a cool thing. We like to do a combination of both residential and commercial refinance. That only applies on the back end when you are buying properties for rentals. Once you purchase the property, rehab the property, and rented the property, then you need to refinance. Okay, so great question. Another question is, okay, Sam, we're going to call you after the webinar. On the funding issue, how do we convince private money lenders or hard money lenders as a first-time investors to work with us? Great question, Ever. So you don't have to convince them. Pretty much, you need to get in touch with them, explain to them what you're trying to do. They need to get to know you. They need to know your experience, your liquidity, and your credit. Okay, so even if you are a first time, your best option is to use private money lenders because they're going to be more flexible. Institutional hard money lenders, they have protocols to follow, and they are looking for experience. Okay, they want you to have at least 1-2 deals. But again, they also work with newbies. And your second option is to do a joint venture with somebody who's got more experience than you. Okay, and then that just helps you get funding. But again, if you have a great deal with a lot of equity, a hard money lender, even if you're a newbie, is going to work with you because their money is secure. They're going to have a first position lien on the property. And if that deal has a lot of equity, their investment is secure, okay? So yeah, look at our preferred partners on their hard money lenders. I'll show them to you how you can get in touch with them. We have over 4,000 private money lenders in ChicagoDealVault. Another question is, can you recommend a commercial lender to buy a vacant used lot over 500? Okay, that's a great question because we are not doing, is this buy a vacant used car lot? Whoa, that's going to be a tough one, and we can look into that. We can call our resources because vacant lots, right, they don't produce any income, right? So it's extremely risky. for a lender to lend on land, on vacant lots. Okay, there's no collateral there except for the land. So we're gonna need to get back to you, Sam, on that one. Are there any other questions on the line? Again, questions are great. I need you to ask as many more questions as you have in mind. Super important. I want to make sure that we make the most out of your time. So I'm going to quickly show you. Are there any other questions? Any other questions? Oh, okay. So Donna, perfect. Thank you for letting me know. So the sound is back. Perfect. So let's just quickly summarize, friends. Due to the pandemic, employment being Serena, recommendation for commercial property 6 units. Okay, we handle primarily residential. Multi-unit is up to 4 units. We have access in ChicagoDealVault to those. We don't, we're looking into, in fact, we're putting together a group of people who are interested in 6 and up. So Serena, we want to get your name and information. If you can send that to us, because we're looking into buying a multi-unit over 5 units, which is commercial. Serena, lenders. Yeah, I'm going to show you where those resources are right now very quickly. In 3 minutes, I'll show you where all this information is found. Okay, so I'm going to go into ChicagoDealVault. So some of the questions are related to funding. So in ChicagoDealVault, I'm going to go to preferred partners, and then we have over 300 partners. Okay, so I have Harmony lenders right here. We have 2 pages, over 27 of them. Okay. Private money lenders right here, there's a tab, private money lenders, over 4,042 to be precise. So individuals with tons of money who've lent money to investors like you and I, and we have their personal cell phone when you click on their name. Remember that I told you about the markets, right? So we're gonna go to area reports right here. So if you want to find the top flipping markets, let's say in a B area, top flipping markets, and then click on search, boom, we're going to give them to you. Okay, so we have over 300 areas already analyzed for you. So we're going to show you, let me just quickly show you the house, the months of housing supply for the top flipping markets. Again, it has to be less than 2.5, which means that it's going to take less than 2.5 months for you to sell your property. Let me show. So let me scroll down to show you the months of housing supply. Okay, so right here, months of housing supply for a single family home is less than 2 months, and this is in Crestwood. So again, it's going to take you less than 2 months to market your flip. So again, we're going to give you the months of housing supply for every single property. And as I told you, for a flip, you need to nail 3 numbers. So for every property, I'm just going to go to pre-foreclosures, high equity. I'm going to quickly pick high equity. So owners owe very little on the property, and the property is worth quite a lot. So I'm going to quickly pick any property just to show you the 3 numbers that you need to nail: the ARV, the rehab, and the max allowed offer. Boom, right here. So we give you the ARV for the property. So think about this: the owner owes 100,000 on the property, yet the ARV is over 200,000. That's the first number you need to nail. The second number is the rehab. We're going to give you a rehab estimate based on the square footage, the formula that I gave you. But again, you need to add the cushion of about 10,000. And then we give you the max allowed offer. So the most you should pay for a flip is 126, rental 147, wholesale 118 or so. So we give you the numbers to make sure that you never overpay for the property. Now, remember the heat map to find out the pockets. You scroll down, you click on actually market overview, and then right here, we integrate with Trulia, okay? And we're gonna click, for instance, if I scroll down, I'm gonna click on the crime. So this is gonna show me a heat map of the neighborhood. So I'm gonna be able to see if this particular property is in a negative pocket, where the crime is higher than the rest. It's gonna give me information about schools. So I love this heat map from Trulia. It's pretty amazing, and it's integrated with ChicagoDealVault. So it's coming up. So right now, this is a perfect example. So the property is located in a low crime area, but as you can see, there's a small pocket right here to the right. It's in a darker blue. So the darker blue means higher crime neighborhood. So as you can see, everything is good, but there's a pocket down there that has higher crime. So if I can move the map, you see that every single neighborhood has pockets. So you want to make sure that the subject property is not in a pocket, okay? So I love this feature. Location, location, location. Make sure that you're nowhere near any negative factors that are going to affect the property value. Again, we also shared our contractors with you. So let me quickly show you. We share general contractors, electricians, plumbers, everything is in ChicagoDealVault on their preferred partners. Let me see if there are any other questions on the chat. Okay, got in a lender in Northwest Indiana. So the lenders are, they can lend on, they're pretty much nationwide, okay? Most of the lenders that we have are nationwide. So Jeremy, go to preferred partners. Again, we have Harmony lenders, over 27 Harmony lenders are nationwide, okay? And then not only that, but we have GCs, electricians, contractors, attorneys, brokers, HVAC, anything that you need. So these are the Harmony lenders right here. So we have over 27 that you can reach out to, and even if you're in Indiana, they're gonna be able to lend you money, okay? We have home inspectors, you see electricians, we have plumbers, roofers, cabinets, staging, structural engineer, tax appeal, title services, dog pointing, window repair, you name it. Anything that you need right here. Something that we just added recently, we have contracts. If you need contracts, we have them right here by category. We have wholesaling contracts, rental forms, purchase contracts, partnership agreements, you name it. Everything is right here at your disposal. And something that we just deployed today, I'm so proud of these guys. Check this out. We have training, but we just put it in categories. So we have basics, area selection, finding deals, analyzing deals, talking to owners, making offers, funding deals. It has a sequence. So we have over 250 videos of live training, okay? So check them out. Super, super powerful. We just released this format today, okay? So are there any other questions on the line that I can help you answer?
Can you show again?
If no further questions, I want to make sure that I share with you the you can get free access to ChicagoDealVault for the next 30 days. Okay, so I'm going to show you how to get access to that. Okay, so all you need to do is send a text message to 818818 with the keyword success followed by your first name, last name, and email. Okay, and then we're gonna give you 30 days free of ChicagoDealVault. So I'm gonna put this on the screen to share with all of you. So again, if you want to get a 30-day free trial, all you need to do is send a text message right now to 818818. The keyword success, your name, last name, email, and boom, we're gonna give you free access to ChicagoDealVault. We have unlimited one-on-one training. Okay, so we're committed to your success. We're going to give you all our resources for you to be successful in 2021 and forward. We want to make sure that you are more successful in the near future, that you make more money, and that you're happier. Okay, we're going to remain on the line for the next few minutes to help you answer any questions, take advantage of this free trial. And on top of it, we're going to give you a free ticket to the 3-day that is coming up in March 14, 15, 16, organized by Chicago Rehab. So free ticket. When you get free access today, we will also add a free 3-day ticket. Another question is, can you show again which site you use to check the crime? Oh, it's within ChicagoDealVault, Shirley. When you open up a property, scroll down and click on the market overview, and boom, we integrated with Trulia, and then we just click on the crime. Super simple. Again, Shirley, if you have access to DealVault, we have unlimited training. Please schedule a training, and we're going to go over step by step on how you can identify the crime heat map in ChicagoDealVault. Again, so send a text message to 818 with the keyword success, first name, last name, and your email. So we're going to remain on the line for the next few minutes to help you answer any questions that you may have. And it was wonderful having seen you. Phil, if you could please post Sunday's event. I look forward to seeing you all. And any further questions, please post them via the chat. We're going to be able to answer them today. Another question from him. Do you recommend a first-time investor to do a small flip or rental as their first investment? Absolutely. Hip, I suggest you do a rental. A rental is less risk, for sure. It's easier. The rehab doesn't need to be as perfect. You don't need to sell the property. It's a super strong rental market today, so doing a rental is what I advise if you're a first-time investor, okay? Flip, it's more stressful. However, if it's a micro flip, right now is the best time to do micro flips because people are paying crazy money. So if you have the chance to do a small flip where your rehab is less than 50, ideally somewhere in the 30s, that would be amazing. You could do a micro flip, okay? But again, the way to build wealth in real estate is through rentals. So your network over time goes up, your passive income over time increases. So that's just the way to build wealth in real estate, owning rentals. So again, Hip, great question. My advice, stick to rentals. Once you get the feel of it, try a flip. Because again, that's from my experience. When we started about 3 years ago, we tried to do a flip as our first transaction. Didn't work out. We didn't buy it in a flipping market. We overpaid for the property, went over budget in the rehab. Thus, we couldn't sell it. Didn't cash flow, it breaks even, we still have it. So again, stick to rentals. It's gonna be way easier. It's more forgiving for mistakes, but what makes the difference is execution, action. Action, execution trumps knowledge all day long. So please take action. And we're here for your support, and any resources you need, we're here for you. So please make sure that you take advantage of our free trial. Texting 818, the keyword success, and unlimited training. Another question is, do you have recommended plumbing contractors that go to Hoffman Estates and Wheaton? Absolutely, Brian. So they're right here in ChicagoDealVault. So let me show you. So you're looking for plumbers. So let me show you preferred partners and then go to plumbers. PPP plumbing. Okay, right here. So you're gonna find quite a lot. We have quite a lot, and also electricians. Absolutely. So we have them both. So go to plumbing, and then right here we have electricians. So they're licensed, bonded. We have properties in Wheaton, and then we have properties in Carroll Stream. So it's close to Hoffman Estates, so they'll go there for sure. So this is the list of plumbers. So we have about 15 plumbers, and then we also have electricians. So please make sure, Brian, to check our preferred partners. Super, super powerful.